Hi all, I wanted to make a quick video for beginners. So we will make a 2 indicator setup for beginners to start trading, alright? But before I begin, I would just like to mention that this is an educational channel. All views expressed over here are for educational purposes. So please do not make or take any financial decisions based on the views expressed over here. Kindly consult your financial advisor before you take any financial decision. Also read the disclaimer below. With that said, let's proceed. I would suggest that beginners do paper trading. Paper trading is available on TradingView, and we are illustrating this on TradingView as well. So TradingView is the platform that we are using. As you can see in front of my screen, I've got the Nifty 50 chart open. I would suggest beginners not to venture into financial Nifty, bank Nifty, Nifty mid cap. They are very volatile instruments. So for beginners, I would recommend that they stick to Nifty 50. Nifty 50 can also be volatile, but it's less volatile than the remaining three. All right. So as you can see over here, I have chosen the Nifty 50. There are no indicators currently on the screen. The blue line that you see is session break. You can also activate the session break by clicking on the setting and then activating the session break. Session break basically shows you when a day begins and when the day ends. So this day ended over here, the day begins over here. All right, it helps you with your trading. Now, since we are limited to only two free indicators on TradingView currently, about 2 months back it was 3, and about maybe a year or two back it used to be 5, but now TradingView only allows 2 free indicators, so we are limited in that sense, but still we shall try and make the best use of 2 indicators that we can find. So the only indicator that I will use in this example is something called regularized. All right, you can see the spelling over here. The moment I type in regularized, REGULARIZED, I get all these. The one that we will be using is the first one, exponential moving average by Everget. Regularized exponential moving average by Everget. We'll click on it once and we'll click on it once more. So we are using this indicator 2 times, all right? The same indicator 2 times. With that, we have already exhausted the limit for free indicator, all right? So anyways, what do we do now? We go to the first one. We uncheck label. At the bottom, these 2 things we uncheck. We leave everything the way it is. And we click over here. From 14, we make that 11, all right? Now we go to the second one, we do the same thing, we go to style, we uncheck these 2 and we go to inputs and we make this 14, we make this 82. So currently we are working with 2 EMAs, one is 11 and the other is 82. You have 2 options. You can either use 11 and 82 or you can use 20 and 200. I'll repeat that. There are 2 combos. The first combo is 11 and 82. The second combo is 20 and 200. Use whichever one you are more comfortable with, all right? Anyway, so for this example, we have chosen 11 by 82. I would like to tell you that the strategy that I'm going to explain, you should use it for a span of 3 months, all right? In the way I'm explaining it. And after 3 months, then you're free to use it in whichever way you want. All right. But for the first 3 months, try and use it the way I'm explaining things to you. Since we are limited, our visibility is limited due to only 2 indicators. So that's why I only want you to use this strategy in a very limited fashion for the first 3 months. And then you can explore and find newer ways of using it. All right. Now, what do we do with this strategy? The beauty about this strategy is both the EMAs that you see on screen, they're working on 11 moving average and 82 moving average, but the beauty is both are using the same color scheme. So they are both using red and green, correct? The only thing that we need to check out for is an intersection happening. For example, this is the last day that we were trading. From opening, and we are only using Nifty. From opening, we don't see any intersection. The first intersection that we see is over here. The red and red. This lower green becomes red, and this upper one also becomes red over here, and they intersect over here. All right. Our goal is to enter whenever there's an intersection with same colors, and our goal is only to grab 10 points. That's it. For the first 1 month, we will only grab 10 points. Every time we enter, our goal is only 10 points. Okay. Now let's see over here. How many points was this? This approximately went to about, this whole fall went to about 36 points, but we will stick to our 10-point rule. We will get our 10 points and we are out. All right. So the first intersection happened over here. The second intersection happens over here. They both turn green and they again intersect. All right. So how many points was this? This was roughly about 27 points. Again, our goal was 10 points. We will grab 10 points and then we are out. The third intersection again happens over here. This intersection goes all the way down to about 92 points. But we stick to our rule. We take our 10 points and we are out. The fourth intersection on that day happens over here. Again, this intersection goes to about 49, 50 points, but we don't trade for the 50 points. We take our 10 points and we are out. So on this day, we entered and exited 4 times, and each time our target was 10 points. Remember guys, in the first month, the idea is not to make money. The idea is not to lose money. So on this day, you would have definitely made money, because every time you made on Nifty, the block is 50. And if you make 10 points, you make 500 rupees. So theoretically, this was 500, 500, 500, another 500. So 2000 rupees. All right. Very good. But the idea was not to make money. The idea was not to lose money. The idea in the first month is to save capital and not lose money. All right. All right. Let's go one day behind this. What do we see? Where do we find the first intersection? We find the first intersection. The day opens over here. There is no intersection. The first green and green intersection happens over here. So we will enter as soon as the intersection happens. How many points? This intersection led to about 62 points or 61 points. Again, we would have only taken 10 points and we would have been out. All right. This was a dangerous intersection. It both turned red and it intersected for some time. It only went to about 22 points and it went back up. Again, we would have been safe because our goal was only 10 points. Again, it intersects over here. Both turn green and this one goes to about 58 points. Again, we would have taken our 10 points and exited. That's it. On this day, we would have only had 3 trades, 1 over here and about 2 over here, and we would have been out. On this day, where is the actually there's an intersection at the start of the day itself, but let's skip that because we don't want to be trading in the first half an hour. The first intersection happens over here somewhere. They both turn red and they intersect over here somewhere. This goes on to about 30 points. We take our 10 points and we are out. And then a massive intersection happens over here. It gives you a kind of a false intimation over here. So there are chances that you would have entered long over here. This only goes on to about 8-9 points. So chances that you would have lost 10 points over here. And then this intersection happens where a professional would have made a lot of money. However, this is a 400-point fall, but we will stick to our rule. This is more than a 400-point fall, but we will stick to our rule. We would have made our 10 points and we were out. So on this day, we would have had 2 gains and 1 loss. Again, we are in the positive. Over here, we have a first intersection after the first half an hour. So both lines become red and a sort of an intersection happens. This goes all the way falling. The first halt is over here at 54 points and then it goes all the way falling to about 86 points. Again, we would have not done all of that. We would have taken at 10 points and we would have been out. This would have been out once. So one time, here another intersection happens. This goes on to about 44 points. We would have taken 10 points and out. And there is no other intersection. So this day, we would have entered the trade twice. Remember, in the last half an hour, we don't take any trades. And the first half an hour, we try and avoid trades. The day before that would have been a little dangerous. The first intersection happens over here. It's a 26-point fall. We would have taken 10 points and been out. and the second one is over here, both turn green. We would have taken, this is a 19-20 point rise, we would have taken 10 points and we would have been out. You could have taken one more trade over here, but I would have suggested after 245 or 230, avoid any trades. This is also a safe trade because the fall over here is close to about 26 points totally, but avoid trading in the last 1 hour. All right. Again, this day we would have had 2 gains. Now, this is an interesting day. There are no intersects. So this was the 15th of December. There are no intersects. So on days that there are no intersects, you got to learn not to trade. Again, a very good example over here where the system is telling you not to trade. You will sit in front of the system the entire day, but you will not take any trade. Remember guys, we trade what we see, not what we think. So you should have not thought over here that, okay, here an intersection is going to happen and taken a trade. No, we will only take a trade on what we see and not what we think. All right. Again, the day before that also, you see no intersection. So no trade. So 14, 15, no trades. On 13th, we would have taken only one trade, which is over here. The intersection happens. This is a 60 point rise. We would have taken our 10 points and we would have been out. There is no other trade on this day. On the 12th of December, you would have got your first intersection over here. This is a 23 point fall. Again, we would have taken our 10 points and been out. Here again, this is a dangerous one, but it totally rises to about 14, 15 points. So you would have made your 10 points. So 1 and 2. Here there are chances that you would have lost money probably. This is exactly a 10 point fall. So assume that, you lost money over there. Then it again rises over here. So this was a confusing day. It gives a 10 point rise. Again, assume that you would lost. So you have 2 gains and 2 losses. But after that, you have a nice fall over here, which goes on to about 123 points. But again, we would have taken our 10 points and been off. So 2 losses, 2 gains squared off. And then you had 1 profitable trade. So 3 gains, 2 losses. You're left with 1 gain. Again, you didn't lose money on that day, which is very important. 11th. No intersection. The first intersection happens over here. And we see a fall of about 22 points. Again, we would have taken our 10 points and been gone. Again, we would have entered in this intersection. This intersection rises to about 17 points. We would have taken our 10 points and been gone. So this day also, we had only 2 trades. Both are gains of 10 points. On the 8th of December, again, there is only one intersect over here. Both turn red and intersect over here. This fall goes on to about 92 points. We would have taken 10 points and we would have been out. The second intersection happens at about 3 p.m. Again, I told you as beginners, you will not take any trade in the last 1 hour. First I said half an hour, but now I'm telling, don't take any trade after 2:30 p.m. Don't take any trade in the last 1 hour. Again, this would have been a profitable trade because it goes on to rise for about 50 points. We would have taken 10 points and been off. But after 2:30, since we don't trade on this day also, we would have taken only one trade. Actually, there's one more over here. But you see, it does not intersect. So we have not taken this trade. So on this day, only one trade. All right. The idea is to make a plan and then stick to the plan with discipline. If you start abusing discipline, then you are going to start losing money. All right. On this day, there is one intersect over here. This is the 7th of December. There's one intersect over here. So we would have taken this green and green touches and it intersects. This rises to about 34 points. We would have taken 10 points and been off. There is no other intersection. There's about one intersection shown over here, which goes on to about 6.5 points. And then it goes back. So you probably would have lost money. And then one happens at about 240, just after 2:30, and after 2:30 we don't take trades. So this one goes on to becoming about 28 point fall. We should have taken a 10 points and been off, but again we will stick to our rules. We will not take a trade. So here we have one loss, one gain, and no trading after 2:30. So it was a flat day. On the 6th of December, what happens? The first intersection happens over here, red and red cross. This goes on to falling for about 45 points. We would have taken 10 points and been gone. And then one more intersection happens over here. Green and green touches and intersects. This goes on to rise for about 62 points, but we would have taken 10 points and we would have been gone. So we made 20 points this day. Again, both the trades were winning. I think that much backtesting is enough, guys. You basically get the point, right? So basically, in the first month, we only take 10 points on every trade, on every intersection where green and green intersect and red intersect. Every time we make 10 points, we collect our 10 points and we pack up for that particular trade. All right. First month, our idea is not to lose money. Second month, we try to push the 10 points to 15 points or whatever your comfort level is. All right. In the third month, second month, the idea is to make some money. First month, the idea is not to lose money. Second month, the idea is to make some money. Third month, the idea is to make a little more money. All right. So basically, if you ask me on Nifty, my plan would be first month, I will only take 10 points on every trade. Second month, I will make 15 points on every trade. Third month, I will make 20 points on every trade. That's it. After that, you are free to decide what you want to do, because you will have some level of maturity by then. I'm assuming that you are a fairly intelligent person. Whoever is listening to this, I'm assuming is fairly intelligent. They understand what I'm saying. By the third month, then you will realize what is working for you and what is not working for you. You'll understand your mental capacity. You'll understand the rules that you have made or we have discussed over and you have followed. You would have also understood how good you are with following a disciplined approach to trading. And after third month, you are free to make your own rules and do whatever you want. The idea is for you to not lose money in the first 3 months and make some money by the end of the third month. All right. So I hope this is going to be very helpful for beginners. I've spent some time thinking about this strategy and put it in place for beginners. So I hope this is going to help people in studying the stock market and charts. Again, as I mentioned, all videos over here are only for education. And I hope this helps you in your education's journey towards understanding charts and moving averages. All right. If this video was helpful to you, please mention that in the comment. Please like the video, share it with your family and friends, and subscribe to the channel. All right. And thank you very much for watching. I'll see you in another video. Take care. Bye bye. Take care.